Welcome back to the Intables, everyone. So I'm going to go up to you guys in the S&P 500 again. Just to recap on the week, we have jobs reports coming out every single day this week. That is why we have been continuing on higher. Again, Jerome Powell mentioning in his last few meetings that he wants a continuation on a decrease in employment. So we were looking for negative jobs reports coming out. So we did get 2 negative jobs reports coming out Monday and Tuesday. Today we had 2 coming out, slightly more stable than the last 2 reports. We did have a slight pullback out the gate. And as you guys can see, we did have a rebound again on our daily chart as we were looking for our EMA lines to cross. Again, we mentioned yesterday that we wanted our EMA lines to cross. We crossed exactly when we were having that pullback, and we did cross here. We did have a major rally on the day. Mentioned that in the Intables Zoom, a very nice breakout on the day if you guys did play to the upside. As you guys can see, we did get that continuation on decreases in buy pressure that we mentioned yesterday, and we did continue on with buy pressure today, again with a lot of momentum to the upside. We are assuming that we could continue on higher from here. However, how much room do we have to run to the upside, and what exactly would be our setup that we're looking for? I'm going to go over exactly what we're looking for here. Now, before I jump into this, you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Intables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here, again, we mentioned yesterday that we had an ice cream bar candle. Again, this was a bullish candle. Sure enough, having a bullish candle coming out the next day, testing exactly here on our 20-day moving average. That is exactly what happened. Just going to extended hours. Again, a lot of people are curious, why exactly did we have a major pullback going to extended hours? Well, we did cross above highs of day. We did cross above yesterday's highs of day. However, we were testing our 20-day moving average here, and as we did test it, we had a major pullback intraday, looking to see if we can digest that pullback and continue on higher on our MACD, showing us that we have bullish momentum short term. Again, we still are below the median of our MACD, so we can easily curl back up here and then possibly curl back down. We have done that multiple times in the past. We need possibly to curl back up a couple times before we do actually continue on above the median of our MACD. So again, that is giving us a possibility of a continuation on lower. Again, we have initial jobless claims coming out an hour before market open tomorrow, and then we have the most important of them all coming out on Friday. We have non-farm payrolls. Again, keep an eye on Friday's move. That's going to be our major move in my opinion, and that's going to predicate a lot of how much we do respect our 20-day moving average if we do continue on higher. Again, we do need that retest. We need to make sure we are respecting our 20-day moving average, and we want to see if our 20 can start to curl up here as we are respecting it and ultimately cross back over our 50 as we are respecting it to have that bullish momentum. Again, we do have bullish momentum at this point in time, but there is no guarantee going to tomorrow. For example, if we have stronger initial jobless claims than expected, then we can easily have an engulfing candle coming out, and we could be possibly testing our prior levels that we did have from our prior levels that we got rejected from. So again, we don't want to retest on a possible engulfing candle, a possible open above and close below our prior day's body. Again, that would be exactly what we're looking for if we are looking for a rejection on our 20-day moving average. In my opinion, at this point, I would be looking for a possible rejection here. I want to see some type of bearish setup from here if we are going to be looking for a major move. Now, the reason why we have to be careful here is because we have been getting rejections on our 20-day moving average, and rightfully so, as our 20 is curling down. This can easily be a quick bounce to a possible continuation on lower. As you guys can see on our monthly chart, again, sitting on what's called a kiss of death, again, dropping below a very key level that we were looking to see if we can hold closed below our 50-day moving average. We do have a green candle coming out currently. Again, this is only this week's of trading. So again, this green candle on the monthly chart can easily turn into a possible large rejection to the upside and possibly have a momentum candle continue on lower and possibly close lower. So again, we are going to be careful. Again, if initial jobless claims do come stronger than expected, or possibly non-farm payrolls do not come as weak as we are looking for just for a possible Fed pivot, then in my opinion, we could get a major rejection. And the other major rejection we can have, which we did have prior, again, we had anticipation into a possible decrease in CPI at this point. As you guys can see, we did have a gap down when we found out that CPI wasn't exactly what we were looking for. So again, with this anticipation on that possible, again, only a possible Fed pivot here, as we are testing our 20, I would want to see, again, some type of rejection here if we are looking for a better move move. Again, if we are going to play to the upside, there's no rush here. Looking for that retest, like I mentioned here on the 20-day moving average, will be very key. Now, looking at our RSI, again, we did mention divergence that played out here a couple days ago, and then we did continue on higher. I mentioned this yesterday, confirming out of oversold territory as we got higher lows while we were oversold here. So again, we got confirmation on these divergence, and again, getting lower highs on our price action to get that diversion is exactly what we're looking for. However, making sure we are careful again, because we are testing our 20, we have been getting rejections. Now, looking at the dollar again, we have been looking at the DXY, or you can look at the UUP. As you guys can see on the DXY, we mentioned last week that we had an engulfing candle to the downside, showing us a lot of weakness here on the dollar, showing us that we could continue on higher in the market. And as we had divergence with our dollar continuing on lower here, continuously continuing on lower here, looking to see if we can test our 20-day moving average is what we were looking for again after this engulfing candle to the downside. This is exactly what we mentioned, looking to see if we can test our 20. Typically we do have follow throughs to the downside after we do have engulfing candles. We did mention this, and sure enough, we did continue on lower. Now we have a slight momentum candle to the upside since we are testing our 50. Now our question will be, will we break down below our 50, or will our 20 continue to curl up here and our 50, and then will we start to get momentum candles and bullish signals here on the dollar to continue on lower? Again, very much going to predicate exactly what jobs reports come out as going into tomorrow and the next day, and how the Feds react and listen to these jobs reports is going to be extremely key. If they do not listen, if there's any major reason why the Feds sound like they are panicking, then the dollar will, in my opinion, continue on higher. So again, looking for that possible setup to the downside here on the dollar to see if we do have less strength to the downside in the market is going to be very key in my opinion. So again, to recap, we do have our EMA lines crossing. We do have our buy pressure finally coming out. We need to make sure we are respecting our 20 to continue on higher here. So again, as we are not respecting our 20, we could assume that we do have a smaller amount of strength to the upside that we do need for a continuation. So again, looking for confirmation here if we are going to continue on higher is going to be very key. Now, looking at candle structure again, closing our body of our candle within our prior day's momentum candle to the upside, we do have strength. We are closing still just below our prior day's close. So again, we need to make sure we are careful, making sure we are not going to get any more rejection from this wick that we had on our 20-day will be very key, because if we do continue on with this rejection, then we could possibly open and close with a possible momentum candle to the downside if, again, initial jobless claims do come out stronger, possibly. We'll see exactly what happens, but again, just keeping an eye on this jobs report going into tomorrow and on Friday is going to be extremely key. Friday, again, being the most important of them all on the week. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Intables room, again, today we had a major breakout out the gate with 𝐒𝐭𝐨𝐤. Again, mentioned them at $2.25. Continued above $2.25 on the day, jumping up all up to $3 and continuing on higher, going to extended hours. An amazing run that we had in the Intables room, over 30% on that breakout. Again, if you do want to see these major breakouts that we mention every single day in the Intables room, go to instables.com in the description below, and you will never miss a breakout like today again. And again, all of you Instables that come over every single day and support the channel, I appreciate you guys. Again, just staying focused on our candle structure here, staying focused on momentum, and taking what the market gives us like we do every single day in the Intables room. Today, a pretty nice day in the Intables room, I thought. Very nice breakouts today. If you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.